Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well on this fine Friday and looking forward to a long weekend, at least if you're in the US. Now, if you're new here, every single Friday I break down the latest news, the hottest topics in the world of technology and cryptocurrency whilst drinking a cup of delicious coffee, which I have right here. Now, in today's episode, we have an Ethereum 2.0 staking and Ethereum 2.0 explained extravaganza, if you will, plus some Binance drama that you need to know about, some crypto payments news, and a nice little sprinkling of Bitcoin news right in there as well. Of course, we also have our usual 404 Logic Not Found segment that has been doing quite well on this series. But like we do on the show every single week, kick it off today with questions from the community on YouTube and Twitter. So I'll head over to the good old iPad and get started with those. Now, if you want one of your questions answered on the show next week, leave them in the comments below or tweet me at Hashoshi4. I'm always looking for great questions to ask here on the channel. If you would be so inclined though as well, please do subscribe to the channel and hit that little bell notification button next to it so you can get a heads up whenever I post new content onto the interwebs on YouTube. Much appreciated in advance. And before we dive into the questions, I need some coffee. Today, I think I'm getting coffee from Bottomless. It's this new service. It's really cool, and we'll be hearing more about that on the channel. But if you drink coffee, what coffee are you drinking? Do you drink a cup of coffee while you're watching this episode? Let me know in the comments. I'm genuinely curious. All right, first question of the day is from Vittorio Catroni. He says, "Hi Hashoshi, very nice video as always. Thank you very much for that, Vittorio. Question for you. Are there software wallets from where it is possible to buy and sell cryptos directly? I find it unfair the situation in which exchanges can anticipate market moves because of their knowledge of how many cash or cryptos there are." This is a great point. Totally true. In proof of stake environments and delegated proof of stake environments, it gives exchanges even more power because they technically own the keys to your crypto, so they can use it to stake and make money, or to stake and get power within networks to then subsequently make money, right? So you do need wallets that are self-custody that also give you access to exchange features. My favorite out there that fits the bill here is the online ShapeShift wallet. You can use your Trezor, your Ledger, I think your KeepKey hardware wallet to store your cryptocurrencies so you own the keys and connect it up to their web app and then use it to exchange cryptos at will. I use it all the time. I actually just switched some Ethereum over to Digibyte like 4 weeks ago, and it was a seamless experience. So that's fantastic, and it allows you to use a hardware wallet with it. But there are also true software wallets that fit the bill as well. The first one on my list would definitely be the Edge wallet. Edge wallet's a mobile app wallet. It's a pretty solid device level wallet that you can use to store cryptos and exchange cryptos. Good user interface, good user experience overall. Definitely recommend. Exodus is another one that's really good. They started out desktop, now have a mobile app. I use it on iOS a fair amount. That's a great wallet with exchange features built in. But I would say my favorite wallet right now, even though it doesn't have the widest variety of coins out there, is Evercoin. Now, Evercoin is a mobile wallet. I use it on iOS myself, but it has some unique features. It does have the normal, storage features, send and view pricing and all that sort of stuff. It has exchange features. But what it has that a lot of other wallets don't have is YubiKey hardware key support. So you can use your YubiKey hardware. I have that in here somewhere. I think it's plugged into my computer to validate basically your identity to the wallet while using the mobile app, right? So you can use it to authenticate a bunch of different processes like buying and selling and trading and transferring, just so that if someone gets access to your phone, which it does happen, they can't really do anything without your YubiKey hardware. So it's not just a password. It's not just a PIN code. It's just another layer of security. And I'm shocked that other wallet providers aren't doing it. I think that YubiKeys are the best investment anyone can make in their personal security online for a bunch of different reasons, for two-factor authentication, but even for wallets like this, it makes Evercoin an appealing solution for me to store crypto that's on a hot wallet on my mobile device because I feel safe and that I have some cold hardware backing me up to protect me. So Evercoin, highly recommend. Check it out. The people behind the project are amazing. I'm good buddies with Miko, who's on Twitter. He's always interacting with people on crypto Twitter. Great guy. I'll leave his Twitter handle here on the screen or down below. So thank you, Vittorio. Great question. Flash Cutie asks, hi mate, thanks for another great video. Thanks very much for watching. My question is your thoughts on the Cool Wallet S, benefits and disadvantages. So I have one. I don't know where it is. My office is just trashed. But the Cool Wallet S is cool, pun intended. Honestly, the Cool Wallet S is for anyone who's not aware, it's like a credit card form factor hardware wallet device. It has a chip built into it that stores your keys. And then it can be used in tandem with the mobile app, which I think it communicates via Bluetooth, if I'm not mistaken. People can correct me on that, to sign and pass signed transactions that happen on the chip, on the card, back to your device to be broadcast. So it's very similar to how the Ledger Nano X works in terms of connectivity, sign transactions on the chip, pass it back to the mobile app, and then broadcast using a set of APIs or web services. Now, that being said, it's great because you can toss that in your wallet, your actual physical wallet, and head out the door. You can put it in your pocket. It's so easy to carry and it's super easy to use. And honestly, it's come a long way in terms of being a product that has some recognition. People now know about it. Early on, it was not marketed very heavily. So now it's a great question. Disadvantage-wise, I think it's not going to have all the same hardware level nice to haves that people are used to. The screen is one of an e-ink style screen. It's kind of small. It's hard to use. The controls are a little wonky because of that. I think it's like a button, click button that's built into the card. I mean, that's a limitation, but for something that you use as like an everyday carry wallet and that connects to your mobile, it's great. And then I think coin support could use some work, but obviously that's something that could be said for every single wallet. So Cool Wallet S, I like it. It's cool. I've had it for at least a year now, maybe even longer. I picked one up when it first came out. So great wallet. Definitely worth a look if you're interested in something for daily carry. John Jacob Jingleheimer Schmidt asks, thank you for another great video. Thank you. What are some of your favorite projects? This is a good one. I normally don't answer this question, but I just put out a video this past Monday with all the first half of my 10 favorite altcoin projects or crypto projects. So I will link that video up here on the screen, I think over here, and in the description below, so you can check that out. Just to give you a bit of a hint, I really like a lot of projects, but I'm not really someone who looks at a project based on, is this going to make me money? Because I am just a student of the tech and the crypto prices and stuff. Like, obviously, who doesn't care about it? Who doesn't want to make money, right? It's not about that. But to me, projects that people find frustrating because of token price or what have you, like Digibyte, people are like, it's not worth a lot. What value does it bring? I just think the technology and the ecosystem behind Digibyte is really cool. I think that the community is really a decentralized community. I mean, Jared Tate, I mentioned this in the last video. Jared Tate, the founder of Digibyte, the person who created it, does not have sole power to just control everything. And he's able to now take a little bit of a sabbatical from social media, take a step back from building the Digibyte protocol and leave it to the rest of the open source community that's doing it, and work on his own endeavors by applying Digibyte to commercial uses, etc. I mean, that's awesome. And imagine it this way, if Vitalik Buterin said, I'm stepping away from Ethereum, it would be cataclysmic. People would freak out because he is such an important figure. And that just shows, decentralization is a spectrum. And the network can be decentralized, but the governance might not always be. And it's always a mix. I'm not saying Ethereum is bad in that way, but it's different. I know we're off on a tangent now. I was talking about Digibyte, now Ethereum. But those are two projects that I really like. So Digibyte and Ethereum, that would be part of my answer. Everyone knows I like Cardano. I like Tezos. I think their staking mechanism is solid. Algorand has a really good proof of stake algorithm. I want them to work more on their layer one smart contract stuff, but it's not a bad project by any stretch. For me, I'm just hoping that we continue to see new protocols being created and the existing ones continuing to build so that I get to play with the cool tech and implement smart contracts and applications and build cool stuff with them, because that's my favorite thing on earth. And that's why I like Chainlink, because it's bringing new functionality to a world that I live in, which is Ethereum dApps. I love building things like that. I love verifiable randomness that's coming through Chainlink. So a very disjointed answer, so my apologies for that, but you got some good stuff in there, some good projects that I like. And stay tuned, because on Monday, I'm going to be posting another video with my next 5 favorite altcoins to round out my list of top 10. So make sure you're subscribed so you don't miss that video. Moving on. Thank you for your question. Sohail Musavi asks, for mobile wallets, is there any malware or antivirus app that prevents security issues? Can you please name some wallet apps that have minimum fees for exchange coins with considerable options? So the second part of your question, take from the first answer that I gave in terms of mobile wallets with exchange features. Those are my favorite ones. Those are the ones that I use routinely. I have no issues with fees. The only thing I would add to wallets that have good exchange fees would be the Cash App is okay in terms of fees. It's not the best thing in the entire world, because yes, you can do Coinbase Pro or all these things that are just not mobile friendly and not user friendly and take forever to release your funds, at least. So Cash App with caveats is a good place to buy Bitcoin in terms of a good user experience. But in terms of your first question, is there a good anti-malware, antivirus app for phones? The answer is, in my opinion, no. Mobile antivirus and anti-malware is a really tricky subject because, quite frankly, on Apple devices especially, they don't give you the permissions necessary to the device at the level that it needs to, like root, system directory stuff, to really be an anti-malware system properly. And I would say that in recent years, people worry a lot about it, but most of the apps that claim they're antivirus really aren't antivirus. They're actually spyware or malware themselves. And so I never install any antivirus, anti-malware, anti-anything on my mobile devices, because 9 times out of 10, they either aren't effective and just don't do what they say, or B, they're malicious. And there's very little way that you can validate that for yourself. I will say malicious apps more often happen on Android, because it's a different ecosystem. It's a different place to post apps. The requirements are stringent, but less stringent than I would say on the iOS side they are. It's really hard to get an app onto iOS. It took me months to get one approved last year. So that being said, don't bother with antivirus or anti-malware. What you can do, though, is to protect yourself. Don't go to sketchy websites on your phone. Don't download stuff from the internet like APKs and other things that run code on your device. Turn off developer settings unless you're using them. These sorts of things can protect you, and it's a lot better than installing an app that you may or may not be able to trust. Great question. Thank you. IBFP2, hopefully that's the way you pronounce it. What exchange do you use when it comes to getting USD to your bank account besides Coinbase when you cash out your crypto? Also great question. Yes, Coinbase takes significant fees. I've still used it in the past calendar year, I can't lie, to move crypto off to cash to my bank account. That was out of sheer laziness. But I will say that my 2 favorite ways to do that now, and people might hate my choices, but I use Uphold because I KYC'd with Uphold early on in their existence, and I've always enjoyed using their service, to be quite honest with you. I know people don't like them in a lot of ways, but lately fees have been a lot better, spreads have been better. I don't really buy and sell on there as much as I do use it to shuffle stuff to my bank, because their reporting is pretty solid. They also have access to precious metals and stocks, which is cool. So I use Uphold. It's a great place, in my opinion. There's also Cash App, which is great to move Bitcoin instantly. So if I do a quick Bitcoin buy, for example, when I do giveaways on the channel, I will give away a certain amount. I will buy Bitcoin. Instantly, I'm allowed to withdraw it, send it to someone else. And then vice versa. If someone pays me in Bitcoin, I can instantly convert it to cash without having to wait 3 days, move it over to my hardware or to my bank account, or just keep it in Bitcoin, move it to hardware wallet. So those are the 2 ways that I usually do it. Uphold, Cash App. You don't really need to use Coinbase anymore, but quite frankly, there are some instances where you just can't get around it. So to each their own. You got to do what you got to do. So let me know in the comments below if you had some that you think should be in here that I didn't mention. Totally fine. I want to make sure people get as much of a well-rounded answer as possible. And that'll do it for the questions. Again, if you want yours answered, leave them in the comments below. Anything goes. I try and answer as many of these as I can, but I'm trying to keep these at around 15 minutes for Q&A so that we can get to the good stuff. And speaking of that, I want to start things off with a bit of a bang, because my gut reaction, if you remember a couple of weeks ago, talking about Binance acquiring coin market cap, was actually correct and very negative. I had this just really sinking feeling that this was not going to go well. Now, after acquiring CoinMarketCap for a hefty sum of money, Binance has already found a way to manipulate CoinMarketCap, this crypto statistics and ranking website, trusted by millions of users, mind you. They've now twisted it and manipulated it to hype up Binance itself in the exchange rankings. And to me, this is just so scammy and unethical, to be honest with you. They took a website that made efforts to represent and rank exchanges and cryptocurrencies using sound metrics as much as we possibly can. Now they've bought that website and are manipulating it to make their own product offering look the best in rankings, or at least appear first in rankings, which is within their rights, but it bothers me. Essentially, CoinMarketCap had originally decided that they were going to rank exchanges by default on their app using metrics of at least a representation of liquidity, instead of an easily spoofed or spammed online traffic visit counts. Now, Binance has since, after acquiring CoinMarketCap, changed that metric to be in their favor by ordering the exchange rankings now by website visit metrics and stuff like that, which puts Binance in the first position. Now, to me, this is just an unethical way to manipulate a large volume of users who use these rankings to make decisions about where they buy crypto, what they buy, and where to even look. And I understand legally it's their right to manipulate the ranking system, to change it, to move it, to do whatever they want. And this is something that happens all the time. But this is kind of like this is a Google move, right? It's a put what we want in the first position based on our criteria and not what's best for the user. CoinMarketCap had its issues, but it really was trying to put information in front of people in a way that makes sense. And I know people love Binance. I know people love what they've done for the space. I know that they've done some good stuff for the space, but it doesn't change the fact that this is a cheap trick. I think it's unethical, and I think it's counter to what we do in crypto and what we need to be doing in crypto. And I have to say it when I feel it. So that's the first place that I wanted to go. But I also wanted to pivot to Ethereum 2.0, because I've been getting so many questions about Ethereum 2.0, like, what is it? First and foremost, what is it? When can we expect it? What does this mean? What do I have to do? So let's talk about that now. So first and foremost, I want to hit the biggest question, and that is, what is Ethereum 2.0? In really, really succinct and simple terms, Ethereum 2.0 is a brand new Ethereum blockchain that's seeking to improve the scalability and reliability of the network without sacrificing on security. Now, this also means that this is not a hard fork and no new coins are going to be created. Rather, when Ethereum 2.0 launches initially in maybe July or after of this year, it'll be totally separate from the existing Ethereum network that we all know today, which we'll dub Ethereum 1.0, or the proof of work chain. Now, this brings me to the how. How is Ethereum trying to achieve new levels of scalability without compromising security? Well, they're taking a multifaceted approach, which has a lot of complicated pieces, but I'm going to talk about the two highest level solutions here that you need to know about. Now, first, they're implementing proof of stake as an alternative to proof of work, the consensus mechanism we have in Ethereum 1.0. Now, Ethereum was built after Bitcoin, which uses proof of work, which is fantastic. It's very secure. It prevents Sybil attacks quite well because it juxtaposes a large amount of sunk cost against potential rewards for block validation in the network. This dissuades attacks like 51% attacks by making the cost of those attacks extremely high, because you have to waste a ton of energy and resources in order to participate even in block making activities. Now, this also means, though, that it's slow and costly and obviously becomes a bottleneck for transaction throughput through the network. So we had to come up with a different mechanism by which to reach consensus, disincentivizing attacks and incentivizing positive network activity. Now, it's also worth saying that Ethereum has needed to move away from this because they're a DApp network. They need large transaction volume that's executed from smart contracts. And so they really had to make this move. They couldn't have left it the way it is. Now, proof of stake, on the other hand, which is where we're going, uses a more economical approach where network participants who wish to validate blocks of transactions stake a position in the network or a portion of their total wealth in the form of the network coin. So in this case, Ether. Now, they try and win the rights to validate blocks based on this stake, which will help them earn rewards if they do get that right to mine a block. Now, in many cases, the more you stake, the better chances you have of getting that honor of validating a block. And what keeps the network secure in this case is people's inherent valuation of self-interest. Those with the largest wealth in the network and the largest stake have the most skin in the game and will likely not want to rock the boat, for lack of a better term, and end up being punished and having their stake devalued or taken away. Now, both an incentive is in place here to make the network continue on without a hitch because they have lots of wealth in the network. They want the network to be successful. But also those who stake and act maliciously in the network forfeit that stake that they've put up. So if you have 1,000 Ether staked and you're mining blocks and you're creating blocks and validating blocks and you're found to be shipping malicious transactions, you lose that 1,000 Ether, right? That's a huge disincentive. And obviously it scales up with how much stake that you have. So for big stakers, this is a heavy hit to take for minting one bad block or doing one bad thing in the network. Now, it essentially makes the risk versus reward for an attack completely lopsided on the risk side of the spectrum. One thing to note, though, is that the minimum stake value to become a validator within the Ethereum 2.0 network when it goes live will be 32 ETH. And you will have to run a validator node to do so. I think you'll probably be able to do that on a desktop computer, nothing crazy, but that's just something to note. 32 Ether at this point right now is around $6,000, so the barrier to entry is still small compared to what it could be and what it originally was, but it's still pretty large. Now, there will soon be a way to migrate your Ether that you have right now on the current Ethereum network over to 2.0 at launch via a deposit contract, which is basically just a lockup contract that locks your Ether on the 1.0 chain and moves it over and credits you on the proof of stake chain 2.0. Now, proof of stake alone can make a network more efficient and scalable. Look at Tezos, for example. But it's not enough on its own to make a network truly scalable into the future, right? So therefore, Ethereum is relying on sharding as well, which is another technique used for scaling. It's even used in enterprise tech a ton already. Now, in essence, if you think about a blockchain, it's basically one contiguous or canonical chain of transactions. Every block is appended to the previous block, all in order. And all transactions have to go through one queue. Basically, you have a mempool and transactions go into it. Miners pull it, they run proof of work, they put it into a prospective block, and then one wins. Anything that didn't get mined into that block goes back into the queue to be processed later. You can make it faster for your transactions by upping transaction fees. But the issue is you still have one concrete block that you can fit everything in on a certain cadence. And so the network can end up getting backed up the more data and more information is being pushed in transactions, which happens a lot in Ethereum with smart contracts. We saw that with CryptoKitties. So everything that happens in that blockchain sits in that one stream. In a sharding environment, on the other hand, instead of transaction processing happening in one single stream by one single group, it's broken up into several mini blockchain networks that all have their own contiguous stream of transactions. So you have smaller, quicker networks that are all validating transactions independently and then sending a proof or attestation of the total information package of what's happening on that mini chain up to a main chain, which is called the beacon chain in Ethereum 2.0. So think of it like a bunch of little mini blockchains reaching consensus and then reporting that consensus back up to the beacon chain in this case for Ethereum 2.0, where the overall network state values are kept. Now, Ethereum is moving to something that's more stateless, but let's just leave that on the table for now. It's not important to the scalability conversation. So now you can have multiple streams that share the burden of transactions coming through the pipeline. And what's interesting is that Ethereum 2.0's spec, or their specification for this whole protocol, it stated that there will likely be 64 independent shards on the Ethereum network when this goes live, And this is down the line, probably next year in 2021, probably when we see sharding happen. So you're not going to see a 64 chain crazy sharding mess in this year. It's going to probably be next year. So this brings me to the ultimate question that I get constantly. When can I expect this to go live? And I think the answer doesn't really have any real clarity, but it's an estimate in my opinion. So here's the deal. What's called Phase 0 is going to go live sometime this year, tentatively July of 2020, maybe a little after. But it's not going to be fully functional. It's not going to be the full Ethereum 2.0 chain itself. What's going live in Phase 0 is the beacon chain, so that new Ethereum 2.0 main chain with proof of stake capabilities that we just talked about. It'll be ready now to test live. Now, this new Ethereum chain will be largely useless for any purpose besides staking at this point. And the Ethereum chain we have today, the 1.0 proof of work chain, will continue to be the main Ethereum network for now for dApps and transactions. Now, once Ethereum 2.0 is seeded with around 520,000 Ether staked across the network and 16,000 or so validators in the network, rewards for staking will start to kick in and the Genesis block will be created for the new Ethereum 2.0 chain. At this point, that will lay the groundwork for Phase 1, which is really where features start coming in to make the Ethereum 2.0 chain useful. And so at this point, it is not until 2021 when we start to see sharding and other functionality starting to come in for Ethereum 2.0 to make it more equivalent in terms of functionality to Ethereum 1.0, which is where we are right now. So if I had to put an estimate out into the world, I would say we see by the end of 2021 at least the minimally viable product for Ethereum 2.0 with sharding and proof of stake and transaction abilities in 2021 by the end of the year. That's what I think. And I know that was a lot of information, like a lot, but it's a high-level introduction, I guess, or an understanding of what's going on with Ethereum 2.0 and what you can expect going forward. So let's pivot to some news in the cybersecurity world. A U.S. district judge just recently denied AT&T its request to dismiss a high-profile case where they're being accused of negligence in a SIM swap attack that resulted in the theft of $1.8 million worth of crypto from an investor named Seth Shapiro. The basis of this case is that AT&T has acted negligently and failed to put proper safeguards in place for its customers in terms of high-risk cybersecurity issues like SIM swap attacks. Shapiro, in response to a prior SIM swap attack that happened before this main one that resulted in $1.8 million in losses, had requested AT&T block any and all SIM swap requests that are done without his express permission. Now, I'd assume he said he wants any SIM swaps to be done in-store with a valid ID so AT&T can be sure it's him. Now, in response to this request, AT&T assured him it would be taken care of. Now, after this request was affirmed, he was the victim of yet another SIM swap attack during which the aforementioned funds were stolen. That's a lot of money to be stolen. Now, this is not the only high-profile SIM swap case being brought against AT&T either, and it exposes the level of gross negligence towards safeguarding customers from this huge, ubiquitous attack vector that's now evident in the world of cell phones. Now, by the way, I just want to tell you, this is not exclusive to AT&T, and so when I say AT&T in this case, this is just some of the high-profile cases, but all the cell phone providers have their issues. And I've created a guide to protecting yourself in the event of a SIM swap attack. So if you're interested in that, I'll link it up in a YouTube card and down in the description below so you can check that out to learn how to protect yourself from a SIM swap attack. Now, I hope that these sorts of events and I hope that these sorts of legal proceedings start to incentivize and really light a fire under the ass of the cell phone providers to finally take this seriously and finally put real safeguards in place. The first thing that you need to do is take away the ability for customer service representatives at phone lines, like at customer service, depots everywhere, from being able to SIM swap remotely. Customers might be annoyed that they have to go into a store, but at least then you can validate someone's identity in the store and have only single people within that organization be able to even change your SIM. The issue now is that you have inside jobs happening where people inside the organizations are swapping SIMs against the rules, and that just can't happen. Now, in other news, the giant e-commerce platform Shopify recently just announced an integration with a well-known crypto payments platform aptly named Coin Payments. The partnership will bring an unprecedented amount of access to cryptocurrency as a payment method for millions of customers. And a similar number of e-commerce stores will finally get the ability to accept crypto online. With cryptocurrency as a payment method being hit or miss these days, I have really heard a decrease in the total amount of information about crypto payments and a lot less buzz about it in the first place. This could finally bring spark back to reignite that excitement about this use case. Now, Coin Payments platform currently allows for nearly 2,000 cryptocurrencies, and upon integration with the core payments methodology behind Shopify, there will be 1,800 or so cryptocurrencies available for customers to pay in on these online stores. I'm telling you, this is awesome news, and I think people aren't looking at this yet as an arbiter for adoption, but it very well could start to get more usage of cryptocurrency into the mainstream. It might not bring new users, but new use case into the mix. All right, ladies and gentlemen, it's time for 404 Logic Not Found. But first, a pause for coffee. For those who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that need to get some attention. And speaking of attention, you can help this video get some attention from the YouTube algorithm by clicking that like button on my behalf. Thank you very much for that in advance. Let us begin with the sad story of BlockFi. BlockFi was the victim of a massive data breach recently, not of their cryptocurrency stores or their wallets, but of their users' personal data. Which really means that the real victims here are the users of BlockFi, whose information is now in the hands of nefarious actors. Now, take a wild guess how this hack occurred. A really expensive break-in? A lost admin password? A tactical team storming the server room? No. SIM swap. An employee at BlockFi was SIM swapped and subsequently used that stolen phone number and email account to access the employee's systems. This hacker was smart and used the easiest way to get access to a system, a SIM swap, which goes back to our original point. With this access, hackers made away with BlockFi users' emails, names, addresses, and other personal data that could be used to extort them, target them for hacks, and etc. This is woeful, horrible, and ridiculous, this entire thing. It gives more and more credence to the fact that SIM swaps need to be addressed. First, and second, collection of personal data should be regulated out of existence. Once a user is KYC'd for the necessary proceedings legally, their personal records should be wiped out or stored as ciphertext, only decryptable by a user's private key or password. It has been proven time and time again that personal information is not safeguarded adequately, and it needs to change. BlockFi did not do enough to secure this information. That is just a fact. One employee's information gets stolen and they were able to access everything and pull it. That can't happen. Even more disappointingly, as of the time of recording this, BlockFi is yet to tweet about this breach to disclose to their followers. I haven't seen a strapline pop up on their website linking to the disclosure, and all I've seen is this PDF document linked up and hosted on WordPress outlining the breach. It's gotten news time, but otherwise I wouldn't have heard about it. I don't feel personally that this is a responsible disclosure of this hack because they're not going out of their way to tell all their customers what happened and how to react to this. It means that they're trying to bury the story, in my opinion. I'm not making an accusation, I'm saying how I feel. It's not good. 404 Logic Not Found. And speaking of not good, Craig Wright, the self-proclaimed Satoshi Nakamoto creator of Bitcoin guy, fell into yet another dumpster fire in the wake of news about a dormant Bitcoin wallet from 2009 suddenly moving 50 BTC. This wallet hasn't been touched since it was mined shortly after Bitcoin's genesis. Of course, everyone expected Wright to come and chime in and claim it was him to prove that he's Satoshi. But instead, hilarity ensued. Craig Wright's number one confidant, Calvin Ayre, tweeted shortly thereafter the news broke and kiboshed any rumors that this was Craig Wright who moved that Bitcoin, claiming Wright denies involvement. Ironically enough, in a lawsuit currently being undertaken regarding Craig Wright's identity as Satoshi Nakamoto, the address from which that Bitcoin was moved is listed as an address Wright claims is his. Now, one of the accounts he has subsequently claimed in court that he has lost access to is again that same account that's now in the news. Now, this is a quandary for Wright at this juncture because he's claimed in the past that he can't move Bitcoin from that address, but that it is his account. Now, if he did in fact move that Bitcoin, he would be lying about his inability to move the Bitcoin. And if someone else owns that account and is now moving the Bitcoin, he'd be lying that it's his account. The only instance in which he could be absolved of any guilt of being untruthful in this is that if the private key was brute forced or stolen in some way, leaving him as the owner who has since lost his keys and is now a victim of stolen Bitcoin. So only in the case that someone stole his private key, moved his Bitcoin without him knowing, means, let's be real, it's probably unlikely, but it means that we were wrong, he's totally right. Now, we'll see how this plays out, but man, you gotta love when the truth is completely in question across all scenarios. Is the key his? Is it not his? Did he move the Bitcoin? Did he not? Did someone steal it? Whew. 404 logic not found. Why even claim it? Why even claim it? Now, speaking of Bitcoin, I promised that we would sprinkle some Bitcoin on this episode, and here it is. First of all, 10K looks like a really tough nut to crack for Bitcoin's price. And now that I said that, we'll probably break through that barrier shortly. I'm probably the worst indicator out there. However, I did read an interesting article that noted a statistical correlation between miner capitulation and dropping miner profits in response to a halving and bullish directional prices, right? So basically, miners capitulate and miner profitability goes down, and that shows that we're at the bottom and now we're bullish from here. So essentially, the hypothesis is that when mining profitability drops and miners capitulate, this is usually an indicator of the price bottom, from which things reset and begin to trend back upward. Now, while I can see the statistical significance in the data that they proposed, I think this is a crappy indicator personally. I don't think there's much credence to this. I also don't believe that there's an accurate bottom to predict in this case because of the state of the world right now and the fact that mining is in a much different place than it has been throughout previous halvings. I've said it many times, but I think the data we have from the past is not going to be a surefire indicator for what's going to happen going forward from here as a result of this halving. So time will tell, but I'd take this one with a grain of salt. Miner capitulation is not necessarily a sign that we've hit the bottom permanently. Now, folks, if you missed my top altcoin picks video that I posted on Monday, please do stick around and check that out. I'll link it here on the screen. And of course, thanks so much for watching. And until next time, have a great weekend. Cheers.